Hi everyone, it's Ava, and welcome back to Your Financial Journey. In the last video in our credit card and loan series, we talked about good debt versus bad debt. In today's video, we're going to focus on credit scores. Think of your credit score like a grade you'd get in school, and your credit report as your report card. That's basically what your credit scores and credit reports are to your lenders, or the banks, credit card companies, and other companies that you borrow money from. Your credit scores and credit reports tell your lenders how likely you are to pay that money back to them on time. Generally, the higher your credit score, or the higher your chances of repaying the loan back in full and on time, the lower the interest rate that you'll get from your lenders, which means you'll need to shell out less to them in the long run. Having a poor or mediocre credit score affects the interest rate you have to pay for almost everything. It can affect your ability to refinance your student loans, buy your first home, and even to rent an apartment or land a new job. So it's important for you to understand what impacts your credit scores and what to look out for on your credit report. And I keep saying credit scores because most people will have more than one credit score, especially if they've been carrying credit cards or borrowing money for a long time. FICO and Vantage are the two primary credit scoring models out there. FICO, which stands for Fair, Isaac & Company, is an independently owned analytics company that calculates credit scores for banks and other lenders. FICO is what 90% of lenders use when deciding whether or not to approve you for a loan or credit card. They also use your FICO score to determine the interest rate they'll charge you on that loan or credit card. Vantage is similar to FICO in that it also calculates credit scores for banks and other lenders. But it's not independent like FICO, but owned by Equifax, Experian, and Transunion. And more on these three companies shortly. The Vantage score was actually created by Equifax, Experian, and Transunion as a means of competing with FICO. The Vantage score has gained popularity in recent years amongst financial institutions. Many personal finance apps, like Credit Karma, use the Vantage score, but Vantage still has a very, very long way to go before it can catch up to FICO, if that'll ever even happen. So FICO and Vantage just calculate your credit score. Equifax, Experian, and Transunion, which, as I mentioned earlier, own Vantage, these three companies also calculate your credit score, but they do more than just that. In addition to calculating credit scores, Equifax, Experian, and TransUnion also analyze your borrowing habits and create credit reports that show the debt that you owe and how you manage that debt. For example, do you pay on time? Do you pay your balance off in full every month? Credit reports are a big part of the Equifax, Experian, and TransUnion business, unlike with FICO and Vantage, which don't do that at all. And that's why Equifax, Experian, and TransUnion are known as the three credit reporting agencies, the three credit bureaus. When you apply for a new credit card or loan, your lender typically looks at your FICO score as well as credit information provided by at least one, sometimes two, of the credit reporting agencies before deciding whether or not to lend you money. And what you'll generally find is that your credit scores across these companies, FICO, Vantage, Equifax, Experian, and TransUnion, will be in a similar range, but they won't be the same. Because each of these companies has a slightly different way of calculating your scores, it's not uncommon to find a 40 or sometimes even greater point difference between your lowest and your highest credit score. So if you take my mom's credit scores, for example, her FICO score is 827. But her Vantage score is only 781. That's a 46-point difference between her highest and lowest credit score. But it doesn't worry her too much, because the difference between her credit scores is roughly the same every month. Sometimes it's a 40-point difference, sometimes 50, and sometimes a tiny bit more. Also, all her credit scores are in similar credit categories, exceptional for FICO and excellent for Vantage. Her Equifax, Experian, and TransUnion credit scores are also in that range. It's only if she were to suddenly get something out of these ranges that she would start to worry and contact these companies directly. If you want to find out what your credit scores are, you can do so by going to Credit Karma, Equifax, Experian, or Transunion and setting up a free account. I've included all the links below. Some banks and credit card companies might also provide this information free of charge when you log into your account online. Of course, once you find out what your credit scores are, the question that usually follows is, how can I improve them? And that, my financial friend, is what we'll be talking about next in our credit card and loan series. So I hope you found this video helpful, and if you need a refresher on the difference between good debt versus bad debt, then check out this video here from my sister, Caitlin. Thanks for watching, and we'll see you again next time.